Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla. Let's go over the market. Absolutely wild day in the markets today. Things just crashing left and right for the most part. But yeah, with all that being said and done, let's just talk about it. Let's figure out what the hell's happening and, well, what we can expect, moving forward. So with all that being said and done, if you enjoyed the video, don't forget to hit the like button. It does help a lot. This is not financial advice. I am not a financial advisor. And of course, my membership section on YouTube is live. The link is down below where I share my intraday thoughts, posts, updates, etc. throughout the day as it's trading, options flow on Tesla, and sometimes other stocks as well. Even in heated markets like this, I try to share my update thoughts pretty much as it's happening. I'm not scared to be wrong sometimes, but I try to be obviously wrong as little as possible. And yeah, I constantly share pretty much as the market is puking itself essentially as well, right? At least I try to, of course. Anyway, with all that being said and done, let's just jump into it. Tesla closing the day, unfortunately, down once again, nearly 4%, putting us at $180.74 per share, which compared to the markets, roughly in line actually with the market today, with QQQ down almost 2% on the day as well. So Tesla kind of following the market for the most part today in terms of just rough percentage-wise relative to that. After hours were up ever so slightly, which I only bring that up. It's not a lot, obviously, but I only bring that up because it's a pretty rare thing to see Tesla up in after hours. Usually it's pretty much always red in after hours as of late. So at least that's a little bit nice to see. So let's move into it. What does this all mean? Like, what the hell is happening with Tesla, right? Well, let's talk about it. So first and foremost, as you know, the overall picture, well, we had this massive consolidation that we talked about, right? Everyone was calling for, 220s, 230s. And we said that is a possibility, but that only happens if we break above this 205-ish level, which we talked about many, many times. And vice versa. We obviously go lower if we break below 198 roughly. Obviously, I think we know which direction we ended up picking. Pretty sad about it because I was pretty much ready for it. I was pretty much all cash and I still got caught in this move because I went in too early. So I'm a little bit upset about that, but it is what it is. Can't time it perfectly, I guess. But yeah, let's talk about it. So massive move to the downside, right? So today was obviously we moved down even further. We actually broke below 180, but thankfully we recaptured it twice and we did recapture it towards the end of the day, which is a nice thing to see. So there is some potential. I want to show you an overall picture on the daily later that shows a bullish and a bearish perspective to potentially the overall setup that we're seeing on the daily. So we'll get into that soon, but I want to focus on this short-term movement for now, 15 minutes, right? This 15-minute chart is essentially going to tell me what's happening for, honestly, maybe the rest of the week, roughly like the next few days, maybe even the next 1 or 2 days. That's what the 15-minute chart is usually good at. And I do think that 15-minute chart is suggesting a bit of a rally. Not, again, I don't think, this is a guaranteed bottom or anything like that, but I do think that, we're in for a little bit of a rally, right? At the very least to the gap fill up here. So for instance, easy way to determine that. And I'll talk about why for a couple of reasons, obviously, but you essentially roughly take, it's actually easier to do this on 65-minute chart. So we'll take the rough swing high over here, bring it down to the rough swing low. Right, and you can see the Fibonacci's right. We have the 0.382 level, which is right at the gap fill from yesterday's, or I guess this morning's gap down, right? Pretty much at 188 roughly. Then we have 191 at 0.5 fib, and then we have the 618 level bringing us out to about 195, which is pretty much where, we had this massive resistance here that, we constantly got rejected, and that's exactly where that fib is. And I really wouldn't be shocked if we do retrace to one of these three levels, essentially, is what I'm looking at right now. Best case scenario, in my opinion, is coming all the way back up to the 198 level and essentially retesting what was an old support to now potential resistance. Most likely a resistance, not guaranteed, but most likely a resistance, right? Tesla is, of course, a little bit bearish here. So that's important to understand. I do expect that a little bit of a retrace. Now, why is pretty simple. So first and foremost, right, we have a nice looking bullish divergence on the RSI, right? As we were constantly making lower lows and showing more and more weakness and going lower, the RSI showed strength and essentially made higher lows, which is nice to see. So that's number one. Number two, we have this little nice bearish, not bearish, little wedge. I mean, technically a bearish wedge, I guess, but it doesn't mean it has to play out in the bearish fashion. But nonetheless, we have this little wedge that we, zigzagged in between for pretty much all of today, right? And then we did end the day with a nice 15-minute candle popping out above it, which is good to see as well. So it's looking pretty good. Looks like Tesla does want to get at least a little bit of a correction on this massive crash because, we have had a pretty substantial crash literally in just the last 2 days. In my opinion, this is a little bit overdone in terms of just the speed of it, right? Keep in mind, it can still go lower. I'm not saying Tesla is guaranteed to bottom out here and we only go up from here. Absolutely not. In fact, it absolutely can still go lower. But when you go down this low, this fast, it's not unheard of to get at least a little bit of a correction in this case to the upside. So we did crash from pretty much almost 13% from the close on that day here to the lowest point on the day in essentially 2 days. That's a substantial drop extremely quickly. So those factors altogether, I do think that, we are looking to potentially get a little bit of a rally here, right? This, what's it called? The wheeling percent is, looking pretty nice here as well. So things are looking like they want to at least recover, at least for the next day or two. Let's just say that, at least for the next day or two. With the market definitely looking like it's a very kind of, similar as well, right? Found nice support. I've got a 65-minute chart. Market also found nice support at a pretty good area that it found support before. And I wouldn't be surprised if we at the very least come back up to some, best case scenario, in my opinion, 444 for like QQQ, for instance. But, wouldn't shock me if we come up to about 440 as well. So 440 to 444, which would give Tesla a bit of room to potentially run with it as well, which would be nice to see. So that's kind of what I'm expecting for the very, very short term. Now, let's go to the daily chart. This looks a little messy here, looks a little weird, but there's two things I want to talk about. So first, let's talk about, let's take these out of here for now. Let's talk about the bullish aspects first, the potential, of course. But actually, wait, sorry, before we go into that, I do want to show one more thing, right? If you take this line over here from where we, started crashing all the way up here, and you pretty much connect it like this, you can see something like this, right? Give or take, of course, right? You can see that, we did obviously, but arguably break this little downtrend over here, right? And arguably came back down to retest it as well, right? So we had a massive downtrend, right? Came back up pretty much in this rough, same idea level over here, which essentially created the downtrend confirmation in terms of the, the actual trend line, if you will. And then we continued lower, came back up to it again, found a little bit of issues here, you can see on this candle, and then we finally broke above it. Well, the downtrend essentially, we didn't really break out of it necessarily, but the downtrend finished as we, we stopped downtrending, kind of like what we did over here. When we came back up to it, we just crashed once again. Same thing could have happened here when we came back up to it. Same thing, we could have crashed once again. Pretty much the exact same thing that happened when we just kept falling back all the way over here. Every time we came up to it, remember, we just kept crashing and crashing and crashing, gapping down over and over and over. Well, we stopped that already. We stopped the bleeding temporarily for now. So that's good to see, right? And combine that with, of course, this little wedge breakout, it's not too shabby. Now, going back to the daily chart that I was talking about. So there's two things that you want to be looking at here as a bull, right? There is still hope for bulls. Two reasons. One, we held 180. That was a really close call today. It was really, really, really close, but we did hold 180, which is good. We have never closed a candle below 180 for a long time, ever since we were trading way back here, right? But ever since then, when we came down here again, we went below, but we never closed a candle below 180. And, if we do start closing candles below 180 on the daily chart, like for instance, as an example, let's say tomorrow we close below 180, like the daily candle closure below 180, that shows weakness. That shows the sellers are absolutely outpacing the buyers, right? The bears outpacing the bulls. And that's not good. And from there, that would pretty much confirm that there's an extremely high chance that we do go lower and at the very least come down to the bottom of this channel once again, which, would be pretty much somewhere in the very, very low 170s to potentially even the potentially low 160s even, right? So that is going to be something to consider. However, we did hold it. So that's good. That's number one. Number two, we have a potential double bottom situation here, right? If you look at it like this, so let me redraw this a little bit better. So it shows you the overall scale from all the way here. So you take a look at it like this, right? From all the way here, we came down, massive fall. And then we had a nice little retrace, little correction, little bear flag. That's fine. We talked about that. But then we came back once again. And now we're pretty much back at pretty much the exact same level. And so far, finding a bid. We're finding buyers. Not the most convincing, bounce, I guess you can say, so far. But nonetheless, we did find buyers below 180 and we closed above 180. That's a good sign. Regardless, potential double bottom here. Not saying it's going to happen for sure, but it is a possibility. Again, if you're a bear, ignoring the bullish side is ridiculous. If you're a bull, ignoring the bearish side is ridiculous. You always want to understand both sides, in my opinion. But what this means is the fact that as ridiculous as this sounds and as absolutely absurd as this sounds, because everyone just thinks Tesla, similar to how when we were up here, some people were just expecting and like convinced Tesla's going to 220, 230, right? They were absolutely convinced like it's for sure going to happen, ignoring the bear wedge / flag, ignoring the fact that we need to break above 205, though we did talk about over and over and over. We were talking about those levels. Now everyone is pretty much convinced Tesla's going down to, again, like they were back here to 160, 150, 140. People are just convinced like it has to happen, and it's ridiculous if it doesn't, is essentially what it feels like right now. But let's talk about the contrary, right? Because again, usually when you follow the market, what everyone else is saying, that's not usually the best way to play it. So the thing that would really, really surprise a lot of people here, in my opinion, is something like this. If we actually do a double bottom and actually get a massive rally back up to the low 230s. I'm not saying this is for sure going to happen. And the only way to really truly confirm this would honestly be actually a break of, once again, that 205 level. If we break 205, I actually think this will happen, because this will also truly validate this double bottom pattern, right? That's the way you validate it. You want to break above this like little centerpiece right here, if you will, which happens to be once again around that 205 level. So if that were to happen, I think Tesla absolutely is looking damn good, and it can absolutely go to, you know, the top of this channel once again, right? 230 to as high as potentially even, you know, 240s roughly. It's a big if, of course, but again, if you're a bear and you think it's going to go lower, completely disregarding this because of just, you know, whatever reason, really, I think is foolish. So that's the bullish aspect though. But let's talk about a potential bearish aspect, right? So first and foremost, we've obviously played out this bear flag. There potentially is more to play out. I'm not saying it's done, but we have definitely played it out so far pretty well. The bear is definitely, one thing I will say is this, before we continue into this bearish pattern here, one thing I'll say is this: usually the way these markets work, right? Bulls, there's a nice saying I like that someone said is, bears, something along the lines of like, bears sound smart but bulls make money, something like that, right? Where essentially bears usually lose. The markets overall will most likely go up unless something absolutely catastrophic happens. So if you're a bull, markets will slowly tread up. But if you're a bear, you can make an absolute disgusting amount of money, because when the market does fall, when stocks do fall like this, it's a very sharp, very fierce fall. For instance, these 2 days erased weeks of bulls gathering strength and moving it back up. Weeks, like 3 weeks, I think, or something like that, 2 to 3 weeks in 2 days. So if you're a bear and you catch these absolutely astronomical falls, you absolutely make a killing, but you pretty much have to time the market. You have to be very, very good with your timing. With bulls, not necessarily. You don't have to time the market. Things will overall go up over time. I just want to make that clear. That's usually how these things work. So regardless of the bearish aspect is potentially, well, we may have a head and shoulders pattern, a bearish head and shoulders pattern. We have the left shoulder here, we have the head here, and if we do get this bounce to around that like mid to low 190s, that potentially might set up the right shoulder. That is a very real possibility. So, you know, let's not completely disregard that as well. So, you know, that is something to consider. We might be setting up a potential right shoulder here on that little rally. So, you know, that's what in my opinion, the bears should be looking at as well. Now, the one thing from someone that's more of a bull than a bear overall is going to say about this pattern is, even though it's a beautiful potential looking head and shoulders pattern, I don't like when head and shoulders pattern happen at a downtrend. We're still very much in a downtrend, regardless of this little move that we had recently. Tesla's still in a downtrend. Usually these head and shoulder patterns, you want them to happen like at an actual true uptrend. Like for instance, if it happens somewhere up here like in the 230s, because now we're, you know, in a more convincing, at least short to medium term uptrend. Here, we're not really in an uptrend. We're still pretty much in a downtrend. So I don't like when these kind of patterns set up in already what's a downtrend. It doesn't really make as much sense to me, because this is usually a bullish reversal pattern, right? It reverses a bullish trend. There really is no bullish trend on Tesla here. So that's why I'm a little bit iffy, but nonetheless, this is still something to consider in my opinion. Now, one thing that is potentially nice to see here is the fact that the MACD on the daily, you can see the green is pretty much retesting the breakout of the red line, right? The green broke out on the red line over here. So far, so good. And now we are arguably retesting the green to the red line. So far, so good. If this thing crosses to the bearish side, okay, not as good, a little bit more questionable. But so far, this could potentially still be a bounce. This could be almost like a MACD retest. Just throwing that out as a possibility. And on top of that, we have a bullish divergence where we essentially made the exact same low, even when the stock was actually lower, because that's what the RSI was currently showing it, right? Where the current candle is, not where, you know. Anyway, regardless, we're setting up a bullish divergence. Even if we do make lower lows, even if we do go back down to the 170s to 160s, and we actually do make a true lower low in terms of an actual candle closure, even though today we technically did, because we did close a candle lower than any of these candles, we're still making a beautiful looking bullish divergence so far. So again, keep that in mind. Doesn't mean we can't go lower. Very real possibility, like I said, to the bottom of this channel, which would still make this bullish divergence valid. I highly doubt it'll make a new lower low on the RSI, but a bullish divergence is absolutely here and absolutely forming. Another thing to keep an eye on. So we'll see how this plays out. Looks like we are pumping a little bit post-market, which is nice to see, up about 0.33%. So that's always a plus. Definitely not complaining about that one. But the main thing that the bulls really, really want to see tomorrow is they really want to see a break back above, honestly, just to make it simple, 182. If we can break back above 182, I think this gives a lot more merit to this short-term rally that I am expecting, like I said, at the very least to the gap fill at 188, to potentially even coming up as high as around the 193-ish area that we talked about on the 65-minute chart. Sorry, 191 to 193. Yeah, that rough area. As best case scenario is 198, which is a retest of pretty much this little congestion period that we had over here. Now, before we end up the video, the last thing, of course, that we want to talk about is options flow. So before the market closed, we did have a 400,000 call coming in for this Friday for 180 calls. So some bull within literally the last like minute and 10 seconds of the market came in with a nice looking call. So someone is clearly expecting a short-term bounce as well. However, this is where the bears are going to start getting very happy. There are some substantial bearish puts that came in today. For instance, we have a 1.2 million and a 2 million block order that came in over here. One for March 21st, one for June 20th, 180 and 165 put. But the one I really want to bring your attention to is this. In the last like half an hour of the day, there were some whale or whales. They're bearish. Let's just say that. They're bearish, right? We have 1.2 million, 1.2 million, 1.1 million, 1.2 million, 1.2 million, 1.2 million, 1.2 million, 900,000. The reason I specifically pointed those out is because they're all the exact same date, April 19th, 200 strike, 200 put essentially. 200 put, April 19th, all of these. I don't know how much that is. That's, I mean, just looking at it roughly, it's probably very close to about 10 million, right? Someone is betting roughly $10 million on Tesla to pretty much continue lower. Now they did buy, very much in the money. So even if Tesla gets the short-term bounce, they're probably still fine, especially with the time that they bought. They do have time on their side and they are in the money. So, even if we get the short-term rally, they're probably fine, especially if Tesla does continue lower after that, which is very possible, right? I do think that's still a very real possibility. For instance, let me just I'll show you this is what I can see happening. This is probably what the whale most likely sees happening, which is why they bought time and it's very much in the money. But a very real possibility is we do get this little bounce. We do come up to somewhere around, the 190, let's just say, to make it simple. And then we do make it go even lower, something like this. And then I think from there, we can potentially start looking for a bounce. This is a very real possibility. So just take that into account as well. But this video is getting ridiculously long. There's just a lot to talk about. Tesla's still pumping up 0.4% post-market. Nice to see that. Definitely want to, if we can break above 182, even post-market or pre-market, doesn't matter to me. That's going to be a good sign. And I think, we'll turn this area back into support. And I think that short-term rally will happen. But yeah, anyways, that's kind of what I'm seeing right now. Ladies and gentlemen, let me know what you think down below. Definitely a long video, but a lot to talk about. So hopefully you enjoyed it. Hopefully you found it useful. A lot of really interesting stuff happening here. It's a very scary market right now. So hopefully you're all, doing well. Yeah, I'll see you tomorrow. Peace.